Hey guys, so I've been doing an Instagram challenge, and I was trying to provide a useful tip every single day, just a quick 60-second clip. And I was asked to do one on raising private capital for real estate business, and I tried, and there's just no way to do that in 60 seconds. So I'm going to do a quick YouTube video on this topic. So this is actually something that I get asked quite a bit, and it's something that I have quite a bit of experience with at this point. We've raised several $1,000,000 to fund our flip projects. So I wanted to talk a little bit about the right way to raise private money and how to go about it and things like that. I wrote down some notes here. So the first thing would be, do you have enough experience and track record to be looking for private money? So if this is your very first deal, you probably should not be using private money. You should be, putting your own money on the line and going the traditional lender route would be my suggestion. Before you go putting other people's money at risk, I would definitely suggest you have at least 5 successful deals under your belt or something of that nature before you start asking people for money. So one of the first things with raising money is a lot of people kind of go about it the wrong way or don't have the right mindset going into it. So in their mind, they're asking people for their money, and they're not going into it realizing that they're actually providing an opportunity for somebody. So rather than looking at it as borrowing money, you need to recognize that you're kind of the prize, that you are providing an investment opportunity for them. And when you change that mindset, that definitely helps you with raising money. So I raised a lot of money without actually ever asking anybody for money. So one thing that I have always done is I put myself out there, I advertise what I'm doing. I'm big on social media and just giving people good free information. And, I do explain what we do and how we do it. And when the topic comes up, if people ask me, how do you fund your deals? I absolutely tell them about it. I explain the process. And if we do have a need, I'll say, we do have opportunities there. If you know anybody that's looking, feel free to give them my information. So that's a good tip there. When you do get a private lender lined up, I would also suggest, so a big mistake a lot of people make is that they try to cut the interest rates down to the bone. So I've had people ask me for money and they're saying 8%, stuff like that. We pay our investors 12% plus a point. So, if we're turning that money 3 times a year, they're getting 15 or 16% interest, right? So it's 12% plus 3, 15%, excuse me. So that's 15% interest. That is far better than most people are going to do in the stock market, especially being a passive investment. So my advice there would be give a little bit extra. And what happens there is if you have a couple investors who are investing successfully with you, they brag to their friends, and before you know it, you literally have people beating down your doors trying to give you money. So give a little bit extra. Don't try to cut the returns down to the bone. You want it to be a win-win scenario for everybody. And the way you got to think about it is it's really easy to go invest your money in the stock market, right? If you want to be a private lender and fund flips, and you've never done it before, there's a learning curve, so you have to make it worth their while to take the risk on you and to learn a new way of investing, right? So make sure that you're giving them that extra return. Another tip that I would say is always put yourself in the shoes of your lender. So a lot of people, I think, make the mistake of the first thing that they start talking about is the returns, when in reality, for the lender, generally their biggest concern is not losing their money, it's security, right? So how do you ease their concerns about security? So always have them secured against the properties. So we secure them in a first position, deed of trust, promissory note. It's on the Missouri side, Kansas is a mortgage, and promissory note. But make sure that you have the proper documentation, you have an attorney that's written up your loan docs, and that you are securing them against the property. Also make sure that you have them listed as the mortgagee on the insurance policy. And what that does is if the property were burned down to the ground, they're the first ones that are going to get paid out and their investment is protected. Give them a copy of the evidence of insurance before closing, and make sure that you spell all that out with them. Next tip here is provide references. So if you've done, let's say you have a couple of investors that you've done multiple deals with in a row, if you have a new potential investor, give them their phone number so that person can tell the new potential investor, yes, I've invested with him. Things have gone well. Here's what the process looked like, things like that. So provide references. Another thing as far as easing the concerns of the investor is you want to explain the entire process. So if I have somebody that's interested in investing with us, I have an email that I've written up that explains step by step every single thing that's going to happen during that process. Everything from, how I'm going to present you the deal. Here is what our system looks like for acquiring properties. Here's where I'm going to tell you, present you with the opportunity. Here's when you need to wire funds to the title company. Here's how all that goes down. Here's when insurance gets set up, and then explain on the back end how they get paid as well, and all that kind of stuff, even down to the payoff. So how do they, so like my process, for example, is I calculate the payoff for them so when the title company will request the payoff, they send it to me, I calculate it, I send it to the investor, I explain, here's all the numbers, here's the original loan amount, here's the interest, here's the points, here's what the effective payout is, here's the daily rate after that. I say, please approve, and reply all to the title company, and that just makes their life easier. So I try to make it as easy as possible as I can for the investor. So explain the process, educate them, and then on the first couple deals, for them, they like to be involved in the process. So especially on the first deal or two, we're going to send them progress photos. We're going to show them, give them updates. Here's what the property looks like. Here's how the rehab's going. Once you're ready to put it on market, you get professional photos. We share that album with them. Here's your property that you're secured against. Here's the final photos. And once it's listed, here's the MLS listing. So once you've done several deals with a person, it doesn't become as important anymore, but definitely on the first one or two, they like to see that kind of stuff, so make sure you're involving them. So that's really kind of the big things that I have there on raising private capital. There's obviously for us, raising private capital has been huge for our flipping business. We structure it in such a way that it really helps us with managing cash flow, and it's so much easier versus hard money lenders where you got to coordinate appraisal, you got to deal with the draw process, you're making monthly payments, and just administrative wise, when you have a lot of different projects going at once like we do, it's just far easier. We get full rehab funds up front, a lump sum payout at the end. They get all their interest and points in the back end, and just makes it so much easier transaction wise for us. So that's really all I got. If you have any specific questions, feel free to leave a comment below. Hope this was helpful. Thanks. Bye.